Welcome to Crowcast, where we talk to our people and our clients about the topics that matter to them. Today, I'm joined by Pete Fairchild, a partner in private clients, and I'm really excited to be getting some insight into his experience of working with individuals in the sports and influencer space. Pete, to start us off, could you tell us a little bit about the different types of income you typically see in this space?
Okay, well, thank you, Francesca. Delighted to be joining you on this discussion. Let's start with the basics, something that's really quite common. If we have someone who's an employee, so that would typically be a footballer or perhaps a rugby player, then they will be paid a salary every month, and their tax requirements will be taken care of usually or largely to a degree by way of payroll deductions, similar to most workers in the UK. So that really removes the need for the player to worry that much about their tax situation, because most of the tax they should be paying is taken care of through these monthly deductions on their behalf by their club, their employer. For more famous people, then they would typically be asked by brands and services to promote their goods or services, and this is called image rights exploitation. So this is off the field earnings. So you have someone who's wearing a particular brand of football boots, for example, or holding up a sign saying they use a particular hair product, for example, something like that. And that's called image rights exploitation. So that can be an additional stream of income. Those in the influencing space will be counting on the number of likes or reposts they have to the posts that they themselves put up on social media about the brands and other companies that they are working with. It's quite typical. In fact, I had a case just last week where a professional footballer had signed a professional boot deal, and the boot manufacturer was going to pay him around about £75,000 a quarter for wearing their brand of boots. So we've captured that income straight away for tax purposes to report to HMRC. But when you read the contract carefully, there was an additional clause in there that said we will also allow you £15,000 of clothing allowance of your choice. Now, his argument was, well, that's not income, because I haven't actually received a payment from anyone.
Yeah.
But our argument is, well, actually, that's an allowance for you to effectively spend money, spend in inverted commas, because you're not actually physically spending the money, but you're just receiving goods effectively for nothing. So therefore, that £15,000 in that example is also taxable income, which HMRC will want to know about. And I think the final thing is, this is perhaps more so for the influencer space, is sometimes the end user will say, well, look, we're not actually going to pay you physical money for doing what you're doing. We will loan you a car. Yeah. We'll allow you rent-free accommodation in a property. And the value of that, the open market value of that, could also be liable to a tax charge.
Absolutely. And I think on a very similar vein for influencers, I think it's the sheer volume of all of these different streams, things like commissions, affiliate links, brand deals, brand trips, like you say, gifting. They wear a lot of different hats, so there's lots of things for them to be dealing with and for them to consider.
Lots to consider.
Yeah.
It's not just a physical receipt of money that crystallises and creates the tax charge.
Absolutely. So moving on from that, are there any clear trends that you see that are emerging in this space at the moment?
I think the first thing to say there is that quite often these are very young people, young adults, not that experienced in handling money. Yeah. And then all of a sudden, the overnight sensational success occurs, and there's this avalanche of income charging down the slope towards them. And all of a sudden, wham, they've suddenly got £1 million for the first time. Don't really know what to do with it because they've earned that money so quickly. They've had no time to plan. They haven't had the opportunity to employ professional advisors, a tax advisor, a financial planner, a wealth planner. All of a sudden, their bank account is sloshing around full of cash. The temptation to immediately go and spend, and then spend some more can be overwhelming. Because perhaps for the first time in their entire lives, they've got what they would consider to be surplus cash. So all of a sudden, perhaps having scrimped and saved and not had a great deal of spare income to enjoy life, they've now got lots of it. And it's a case of, well, mum and dad have helped me out, my brother, my sister has helped me out. I've seen cases where they go and buy houses, they go and buy cars for all of these people. And then all of a sudden, someone like me comes along and says, well, I'm just tidying up the tax position. You've earned £1 million from what you're doing. There's now quite a significant income tax and social security charge. And the reaction from the client is, hadn't really considered that. I spent the money, or I put a swimming pool on, or whatever it is. You know, so the temptation to suddenly have money for the first time and blow it can be overwhelming. So that is an all too common trend, and we just need to inject some patience, put the brakes on the situation for a bit. Let's get underneath the tax situation. Let's do some basic financial planning, and then we know what your outlays are going to be in those areas. Then within the plan, we can build spending around mortgages, rent, utility bills, some nice things in life as well. But please don't spend it all at once.
Wise advice. From your experience, kind of just leading on from that, where do you see people most commonly go wrong when it comes to tax?
Well, let's start with the very basics. As someone who is perhaps on the register to self-assess for the first time, one has to go forward to HMRC and sort of put your hand up, wave, I'm over here. All of a sudden, perhaps I was a student until recently, not earning very much, so therefore I didn't trouble the tax authorities. All of a sudden, particularly if you're an influencer, you're receiving income gross that hasn't gone through a payroll, like you would for the team player we talked about before with an employer. So you have to come forward to tell HMRC you're on the self-assessment radar and register. Now that takes a process. Now normally you delegate that to your accountant who would take care of that for you, but someone's got to have the thought process to go ahead and do it. And then all of a sudden, as well as registering for income tax and national insurance contributions, there's VAT issues as well. Have I already breached the threshold? Now, I've come across many situations where the first assignment that hits the big time smashes through the VAT registration threshold immediately. And then we come along sometimes months, very occasionally a year or two down the line, and we're saying we're already way, way behind in registrations and paying these taxes. So just getting the basics right, registering for income tax, self-assessment and VAT are pretty crucial. And then that leads on to, you've got to get into some good financial habits, because every quarter you can have a VAT charge. So you're collecting VAT from your customers. That needs to be banked and set aside, ideally, and not touched, and certainly not spent, because every 3 months, VAT return is going to be required to be filed with HMRC, and the likes of us will be saying to the client, you've got a VAT liability of whatever it is. So it's just getting into that financial discipline, because it's not just the VAT. Every 6 months, as you know, there's a self-assessment charge to pay, every January, every July. So, these are quite fundamental dates in the diary that can't be ignored, because although as the influencer or the spokesperson you're earning a lot of money, then there is the tax considerations to keep alongside that as well.
And are there any areas that individuals get caught out without realising it?
I think the best example, Francesca, I can give you there is in relation to the professional footballer world. So I'll tell you what, let's create a little role play, okay? You are a superstar footballer, okay?
Fantastic.
And I'm your agent, okay? So we have a contract between us that I will provide agency services to you.
Okay.
And all of a sudden, England have defended their European crown for the second or third time, and all of a sudden you're really, really, really in demand. So I'm using that as a springboard to go and talk to other clubs to say, Francesca should be your next superstar player. Okay? So I go off and have those negotiations and discussions, and let's say 3 to 4 weeks later, I come back and I say, great, your basic pay is now this, your bonus structure is that, your win bonus, your goal scoring bonus is all of these things. So we've really, really, really hit the jackpot. And you're sitting there going, fantastic, I've got all this money. And I will say, but in terms of my fee for my services, don't you worry about it. What I'm going to do is I'm going to deliver my invoice to your club, and they will pay me instead of you. But let's take a back seat and reflect on that. What's actually happened is your employer, your football club, has stepped forward to pay a bill that belongs to you on your behalf in settling my fee. So that creates what's called a benefit in kind tax charge. Now, if I had £5 for every footballer I've had this conversation with who doesn't get this, I probably wouldn't be sat here. I'd be on a beach somewhere. But what it means, and it is a true benefit in kind, because in this example, let's say that my fee was £100,000, okay? Because of the service agreement we got between us, in the first instance, you're on the hook to pay that, so your outlay is £100,000.
Yeah.
If your club settles that £100,000 on your behalf, then you pay income tax on the value of that fee. So at the worst case, you'll pay £45,000, a 45% charge.
Yeah.
So I've got two fees effectively in my hands. One's for £100,000, one's for 45. Make your choice.
Yeah.
You're going to choose the lower one.
Absolutely.
Clearly. But have you made provision for that? As it comes as a shock to you, and as we'll discuss in a bit, I'm sure, shocks in terms of tax are not good news as far as clients are concerned. And I think the other one that does catch a lot of people out is visiting sports people coming to the UK. They also have a tax charge to fund in respect of income they receive for UK-based appearances. Now, most people will say, well, I'm not British. I don't live in the UK all the time. I came to do a job for a week or two, then I went back to my other country. Why am I paying tax in your country? Well, if you've been paid for that appearance, the legislation says you're liable to tax on it, and that is a surprise for many.
Yeah, absolutely, and a really important point to understand as well. What are some of the biggest misconceptions that you see?
Well, let's continue with that. Pick up the point that I just made about visiting sports people. We've just seen Wimbledon 2026 complete, and what a championship it was. But the vast majority of the competitors were visiting sports people to this country. They are liable to tax on their prize winnings that they get from competing at the championships. But it goes beyond that, because the UK is one of the few countries in the world that also taxes endorsement and sponsorship income on top of the actual appearance money that they get. So this is all down to a case involving the former tennis player Andre Agassi, who was around, and I'm showing my age now, he's around in the 1990s. So I think it was in 1992 he won both the Queen's Club tournament, which is the traditional warm-up on grass courts to Wimbledon, and he won Wimbledon as well. As a result of that success, because he was wearing and using tennis equipment supplied by Nike and Head, Nike and Head, both US-based companies, paid Andre Agassi Inc., Agassi's company in the US, bonus money for his success. So the money's passed from two US companies to another US company. No money's come through London, no money's even entered the UK. So his argument was, well, there's no UK tax charge. And this case went all the way to the House of Lords, and their lordships ruled that that bonus money only arose because of his success competing in the UK. And therefore, despite the fact there was no UK entry at any point for that money, a UK tax charge nevertheless arose. So I did a piece in City AM just before the tournament started that even talked about the somewhat bizarre situation where if you've got a top-level player who's got millions and millions of worldwide endorsements and sponsorship income, if they have a disaster and exit the tournament in the first round, you might argue, don't feel too sorry for these people, because even a first-round loser probably got about £60,000 appearance money. But by the time you bolt on a portion of their worldwide image rights income on top, they could actually be worse off financially in the UK. So they've had £50,000, £60,000 of income, plus a portion of all this extra image rights income to be assessed in the UK. But the UK income was only the 50 or the 60. And then by the time you work through the rate bands, they could have a situation where they're worse off financially, taking into account the fact that they've probably had travel expenses, hotel expenses, they've got coaching, they've got a manager, probably got a masseuse, all their sort of nutritional hydration type advice they get. So it just mounts up and up and up all these costs. But that does catch out a lot of people.
Yeah, it's a very important distinction to understand and consider in the choices that you make.
That chunk of time in the UK, provided that's not terribly significant, they won't pay UK tax. But as a visiting sports person or influencer, I'm sorry, the gloves are off as far as HMRC are concerned, and there probably is going to be a taxable situation.
So given how unpredictable income is in this space, what makes managing tax especially difficult?
Going back to what I said earlier on, these are very young people typically when they start off here. So getting them to focus, sit down with professional advisors is not the easiest thing in the world, because they're simply not used to it. It's not their fault. They're simply not used to it.
Yeah.
And getting them to devise, number one, and then B, stick to a plan can be quite tricky.
Yeah.
You might have to repeat yourself several times before the pattern of behaviour then starts to develop. That's going to make sure that there is money in the bank to pay VAT bills every quarter, to pay 6 monthly income tax and national insurance contributions, as well as take care of monthly and day-to-day living expenses. All these things need to be factored in. Now, the job, I think, starts off with us as tax practitioners, as we can look at the client's income. We can then net off the tax and the national insurance contributions, and then work in dovetail with the financial planner to say, well, this is your net income, and we might want to think about putting this net income into one of 3 buckets. Bucket number 1's probably going to be the big one in terms of your monthly spend on mortgages or rent. Number 2 bucket is for your day-to-day expenses. And then number 3 bucket is for the sort of luxury one-off treats you have every now and again when you need to pick me up or you think you've done well. I want to treat myself. Trouble is, too many people put too much in bucket number 3 to the detriment of the other 2.
Yeah.
And it's getting across the message that whether you're in, well, either space, sports or influencers, the likelihood you've got quite a limited shelf life. Certainly with sports, most Premier League footballers are looking to retire at 35-ish, and actuarially they've still got an awful lot of living to do. For a guy, life expectations mid-80s. For women, it's even higher than that. So by the time you finish your sport and being paid for that sport at 35, you've got an awfully long time to go before you're thinking about, turning up the daisies. And there's got a lot of living to do in that period of time, 50 plus years potentially, and funding that and having a plan to take care of that, comfortably, is something that can't be underestimated. And I think the other thing that I'd like to sort of just mention is if you've got a UK sports person, or more so perhaps this time for an influencer, they may be called abroad outside of the UK for particular work assignments. Now, a lot of the countries also deploy a withholding tax regime similar to the UK does in terms of performances that take place in their jurisdiction. Because the individual themselves is likely to be UK resident for most of the time, they will always have a UK tax issue on their worldwide income. So if they're abroad in, whether it's France, Spain, Germany, the States, wherever, keeping paperwork that records the income that they've received, and probably more importantly, any withholding tax that's been withheld, is absolutely vital. And the reason for that is when we come to complete their UK tax return, we're going to have to report worldwide income, but the more withholding tax we can capture to offset and use as a credit against a UK liability, the better. Because otherwise they run the risk of paying double tax, and who wants to do that? So it's administration, it's paperwork, it's documents, it's boring. But I implore people just to keep the paperwork, or if as soon as they get it, send it on to the likes of us, because we love that sort of thing. And we will eat that up and we'll capture it and then use it to benefit their position going forward. So it's just keeping the receipts, keeping your invoices, keeping those double tax certificates, absolutely vitally important.
So you actually alluded to my next question there, but have you got any other pieces of kind of practical advice that you would give to people in that space?
I suppose the other one to consider, and this is for those that have got the appeal to work a lot with third-party sponsors and or their club, if they're a footballer or rugby player, for example, is to think about the vehicle that's used to receive image rights type money. So if we go back to my example of me being your agent and you're the superstar female footballer, hopefully the contract I've got you with your club will produce sufficient income that's more than sufficient to cover your day-to-day living expenses and some. So we could have the situation where if we do nothing, all the additional off-the-field earnings through this promotional and endorsement type work is going to come to you personally, and straight away you're paying 45% tax on money you don't really need. So what's the alternative? The alternative is to actually drop that income stream into a company of which you are the director and shareholder, so you control that money. The benefit there straight away, of course, is that the tax charge drops from 45% personal rate for you to a 25% corporate tax rate in your company. And there's potentially some slightly more scope for claiming deductibles, expenses in the company vehicle. And it's a nice secondary retirement pot or post-football career pot in our example, because when you finish playing football in your mid-30s, for example, what are you going to do next? You might say, do you know what, I want to put my feet up and live on a beach, sipping a pina colada. Brilliant. If you're not in that situation, you could become a pundit, you could go into coaching and management. How do you transition from one to the other? What's your fallback position? The fallback position could be the cash that's built up in the company whilst you've been playing football, and this has been sitting there doing this with cash. You can build on that to say, do you know what, I'll take some of that back out now, and that will help me transition from being a top-level footballer into doing my next career. So that's something that we should build into a financial model just to see and just test the temperature to see whether it works from a tax and financial planning perspective.
It's clear that it can be quite a confusing space. What would you say that what are the issues that cause the most stress and confusion for your clients?
I think there's two things to say there. One is that no human being likes being surprised. So surprises about unexpected or unknown tax liabilities can really frustrate people. And I've got a live case of that where this January, right in the middle of self-assessment season, we're up to our neck in tax returns for clients, and a football agent friend of mine says, I've got a referral for you. Great, happy to do more, happy to help out. Speak to the guy who's had his tax return to April 2025 already completed and filed by another firm of accountants. And the guy had about a £450,000 outstanding tax bill, because going back to my example of the agent's fee payment, his agent got paid £1 million by the club, creating at 45% a £450,000 tax bill. And the player said, this can't be right, surely. No one forewarned me about this. Nobody at the club told me about it. My agent never told me about it. My financial planner has not told me about it. This can't be right. So my first engagement with this brand spanking new client, where you want to get off on the right foot and make a good impression, was to say, I'm ever so sorry, but this is correct. And I went through how and demonstrated financially how it is a benefit to pay the tax on the value of the fee rather than paying the £1 million itself. But we're in the middle of January, and he's got a fortnight before the tax payment is due on the 31st of January. And his comment to me was, because I'm not forewarned about this, I haven't armed myself to pay it. So I've been putting money aside month to month, just haven't got it, even though I'm a top-level, high-earning footballer. So I said, well, look, we'll probably have to go to HMRC and ask what's called a time-to-pay arrangement. That's where we're not disputing the liability, we're accepting that, but we're just saying, because of these set of circumstances, there is no possibility of the player settling this in one lump sum. We need the payment spread out, and we ask for 6 months. But picture the scene. I'm on the telephone to someone at HMRC who can see on his computer records that I'm talking about a high-level, high-earning, multi-millionaire footballer, and I'm saying he can't pay his tax. And I'm asking this guy at the revenue for a favour. That's quite a challenging conversation. But I said, look, what's the alternative? The alternative is you'll probably go for bankruptcy proceedings, potentially, and then you'll get nothing. What we're asking for is a 6-month window to pay the tax, and then the liability has been funded. But there was interest to pay on top of the liability itself, so it actually compounded the issue. So not the most positive way to start a new client relationship with someone saying what you've been told, actually in terms of the liability, not the reasons behind it. That was the missing link. So we came in and we filled that missing link and explained it, and then the client was accepting of the position. But going forward, what we've done is we've tracked future payment of agents' fees, and then to get a little bit technical for a moment, we've asked HMRC to adjust the pay-as-you-earn tax code to include, as well as the pay that the guy is going to receive, we're going to include the benefits in kind as well. So what the result of that, of course, is that month to month, extra pay-as-you-earn tax is being deducted from his wages. So he's paying in year via 12 monthly instalments future liabilities rather than paying the whole lot off in one lump sum post the year end. And the benefit there was that in another case where I deployed exactly the same set of circumstances, my client sat there after training one day, and just before they all left, two of his teammates come up in January saying, I don't know what's going on here, but I've got this enormous great tax problem to pay in a couple of weeks' time. Hey, how's your situation looking? So he said, I've got a tax refund coming because my return's been filed and I've got money coming back. My goodness, how have you managed to do that? Not entirely sure. Peter Crow's works of magic somehow. It's not magic, it's just fairly basic as far as we're concerned, but we're experienced tax practitioners. But to them, what a world of difference. They're sitting there fretting and sweating, thinking, how am I going to fund this liability? And my guy's sitting there, a bit smug, but, what's he going to do? Saying, well, effectively, I'm paying that month to month, so my net take-home monthly is a bit less, but the tax problem is being dealt with at the same time. And that's been built in by Crow and Pete going forward for all the years that I've got left of my contract. So we actually turned what could have been a negative into a positive in that we got 2 new client referrals out of that situation. The second thing to mention here in terms of frustrations is more so with self-employed sports people and certainly influencers. Now, if you're a professional golfer or if you're a boxer, and certainly if you're an influencer, you're not an employee. You don't get that regular monthly recurring income. Your income is actually quite lumpy. So you could be a boxer and you could at world title level be fighting 2-3 times probably at most every year. So you've got 3 or 6 months go by and you're not getting paid anything. So that requires someone to sit down with the player or the boxer and say, let's try and smooth out across a 12-month cycle what we think you're going to be receiving, providing you don't lose. You've got to keep winning. That's the sort of tax planning for the boxers. Just keep winning, don't lose. But you need to keep paying regular monthly recurring bills, mortgages, rent, utilities, groceries, fuel in your car, etc., despite the fact you're getting paid far more irregular than every month. So that requires a lot of financial management and a lot of hand-holding with clients. And then when they do perhaps move up to level, or certainly world title, if you're a boxer, or if you've just won the Open, for example, it's coming up in a couple of weeks' time, the British Open, then revisit that plan. Because some players and some influencers think, well, I've spoken to my band of financial advisors and tax people, I have a plan. Now that's version number 1. You need to keep flexing that plan as life moves forward, because you could get married, could have children, could get divorced, children go to private education, you could have inheritance, whatever it might be. That plan will meander around as life progresses. So you've got to keep revisiting this, and certainly with top professional sports people and top earners in the influencer space, I would suggest that we need to be meeting them probably, if not every quarter, every 6 months, but probably every quarter, because they can change their sort of financial profile that quickly. You've got to keep it live as a plan. So you just try and deal with that lumpy nature and just sort of take that out of the equation and almost turn it into a monthly situation where you can look at it in isolation month to month to make sure that all expenses are more than covered by income.
Also, because the kind of influencer industry is ever evolving, it's always changing, there's new platforms, new sources of income. Those kind of regular meetings are really important in continually, understanding the space and also making sure that someone's financial plan really continues to work for them.
And with one client who was a bit reluctant to get involved with that sort of thing, it's like, well, it's just time, isn't it? I could be spending with my family doing stuff. Why do I keep need to seeing you people? And I said, well, do you fancy coming to a board meeting? Board meeting? Never been to a board meeting in my life. That sounds interesting. Talk to me about that. What's the board? What's the company? You are. We're all here to talk about you. And people like talking about themselves. And all of a sudden, there was a sea shift change. Actually, I can see the benefit of this. Yeah, come in. Let's sit down, because I need to make sure that the tax advice dovetails with the financial planning, which dovetails with the wealth planning, because there's no point me running off and creating an elaborate tax-saving structure for tax purposes when the financial planner says, well, you've now strangled the cash flow that I can then receive and manage, and the investment manager's sitting there thinking, well, that doesn't work for me either. So you all need to be sat around the table, each representing one segment of the pie to the benefit of your clients. So you can only get that with a multi-way conversation.
Absolutely. And kind of touching on that, where would you say that kind of the biggest knowledge gaps exist?
Well, I think there are several. The first of those, and I had this just the other week with someone who said, well, I'm coming into the UK to do a bit of work, and you're telling me that because of my UK performance, I'm liable to a tax charge. How's HMRC going to know, though, that I'm actually physically in the UK? To which my response was, well, what did you do when you got to passport control? Oh, I just got my passport out and put it on the chip and pin thing and just, right. So your arrival's been captured by a computer and a scanner. HMRC do ask for that sort of information. So they will know. So when it comes to filing your tax return down the line, if the number of clicks from the scanner every time you came in and left the UK doesn't match the number of days we've reported on the tax return, there's a discrepancy. And as you all know more than most, if a discrepancy arises as far as HMRC are concerned, they start asking questions. So that's the first thing. Another common question from clients is, I've got a range of sponsorship agreements. How is HMRC going to know about them all? And I had a real case example of this. Quite interesting, was a famous, who's now ex-Premier League and international footballer, who did a lot of advertising and a lot of appearances in Hello magazine. And every time he appeared in a glossy magazine like that, despite the fact he's all suited and booted and cufflinks and all that, there was a great moment of doing this and showing off. He was always posing like this, showing off the wristwatch. And of course he's doing that because he's being sponsored to wear a particular brand of watch. Didn't think to tell us as his accountants, though, that he'd had this arrangement. So HMRC, as well as going to the passport authorities to say, can you give us a list of all the clicks from when people have come in and come out of the UK, HMRC went to a lot of these luxury brands and say, can you please give us a list of all the individuals that you are working with and paying money to for promoting your particular brand or service or product? So HMRC is sitting there armed with a copy of the contract that says this particular luxury watch brand is paying our client a significant amount of money for doing all this sort of thing, or however he's posing. And again, when we filed the tax return for this particular individual, it was silent because we didn't know about this particular contract. And they're now asking for a breakdown of the turnover that we'd shown. We provided that. And straight away there's a glaring omission, which then led to a full-blown, long-running, quite expensive inquiry and a settlement which then saw the client pay the tax that he was always going to pay anyway. But because there was a prompted inquiry from HMRC, that meant there was interest on late payment of tax, and there was also a penalty for reporting it too late and reporting it only when challenged. So don't sit there as an influencer or a sports person entering into all these third-party agreements thinking HMRC will never know, because the chances are they probably do. So if you're working with your management team, your agent, and I always implore meetings with the player, influencer and their manager or agent, and I'm talking to the agent now or the manager, if you're arranging these things, just please send me a PDF copy on email of the contract when you finally got it. Because again, we love paper, we love documents, we'll keep that on the file, and then we know what amounts and when to declare these income receipts. And I think the final thing to mention, Francesca, is on image rights again, where sometimes agents and clubs try to get a little bit too cute when it comes to arrangements for involving a professional footballer or rugby player. In as much as if they're not British, then it used to be more often the case that the image rights structure was set up offshore, involving an offshore company. The thought process being, well, if it's offshore, it's outside the UK, there's no UK tax implications. Until someone like a boring tax advisor comes along and says, well, actually, the club are paying £200,000 or £300,000, for example, for the use of that player's image rights. And again, similar to the Andre Agassi case, where they actually perform in the juices. Well, they're in the English Premier League. Yeah, okay, so that's UK-based activity. That's what creates the UK tax biting at that moment. So you've created this elaborate, sometimes offshore structure that's probably quite expensive, but actually it's achieved nothing from a tax perspective. So you might as well onshore the structure or keep that one going, that's fine, but it's going to be liable to UK tax forever and a day. So ever so sorry to announce that and burst your bubble, but you haven't achieved what you thought you might.
So what do you think people misunderstand most about money?
If you're outside the sports and influencer sector and you're looking in and you're seeing highly paid Premier League footballers and influencers appearing on Instagram and Facebook, you think everyone is a multi-millionaire, living the high life. Goodness gracious, aren't they lucky? The reality, though, is that really that's just the privileged or the talented few. The vast majority of footballers, sports people generally, are earning probably reasonably well, but it's not into the millions, not in certainly the tens or hundreds of millions. There's only really one Cristiano Ronaldo out there that, is just really smashing it. And a generation ago, there was a David Beckham doing a similar thing. So they don't come along that often, these sort of people that earn zillions. And you have to bear in mind that there are stories, and I've encountered those myself, where it's all gone wrong. And it's publicly known stats that I think 40% of Premier League footballers within 3 to 5 years of retiring from the game file for bankruptcy, which is a startling statistic when you think of the earning potential that they've got. It's the financial mismanagement that has gone on that no one's really got a handle on that's caused this situation. So as advisors, we need to be working with clients to say, look, if you're coming towards the end of your active career and your income's about to, frankly, fall off a cliff, you've got to rein in those expenses. Or you've got this image rights pot over here that's got accumulated cash that can temporarily step in to help. But you either need to go and get another job, rein in the expenses, sell one of the expensive houses, just to keep things on an even keel. You can't just sit back and pretend that the tap that's pouring out hundreds of thousands or millions of pounds every year is going to be there forever. As we said earlier on, professional sports people have got a limited shelf life. When the time they're in their late 30s, it's probably coming towards the end of their career, and they've got many, many, many more years to go for the rest of their life. And that requires financial management, because often when people are retiring from professional sports, they're retiring in life at a time when life's expenses could be amongst their highest. They've got kids at private school. They probably may have had a divorce and they're paying maintenance to an ex-partner. They've got a gardener, a cleaner, a nanny, a cook, the maintenance guy, the mechanic, the fleet of cars, the collection of watches, all lovely things. But if you've not built the financial plan around that expenditure, how's it going to keep going when your income's going to be a fraction of what it once was? So everyone out there is not a multi-billionaire, is absolutely rolling in it. There are lots of people out there that with good financial management and good tax planning can, do okay. But there's also sadly many people that don't have that support that are looking at financial ruin. And that's very sad to see.
Do you find that there's a gap between how people view their earnings and the reality of managing that kind of long term?
Yeah, I think that really goes back to what I've just said, and they've got this assumption that the good life is just going to continue and roll on for year and decade after that, and it simply doesn't. You've got to be prepared for what life throws at you, and you need a plan B. People don't plan to fail. Spin those words around, they fail to plan. And I keep banging on about this with every client conversation I have, but the plan is so valuable. You've got a framework on which to build. And I've been in situations that involve a family unit where you've got mum and dad saying, well, my son or daughter's now hit the big time in terms of their football career, their influencing earnings are just enormous. I'm part of that success because I was the one that ferried them around to go to studios, to go to training, to go to match days. What's in it for me? Well, we can include you in the conversation. At the end of the day, it's your son or daughter's career. It's not yours. And I have had situations where families have had a little bit of infighting, where we've set up a plan, everyone's been present at the meeting, everyone said they bought into the plan, and then I had one case involving a young player at a North London club who phoned me up after 6 months to say that financial commitment that I'm supposed to make into the investment pot, I can't afford this month. Well, why not? Well, the money's not there. Well, why not? Because mum and dad have sort of stepped in and helped themselves with some of my money. Why have they done that? Well, they think they're entitled to it. And you could just see the cogs in his head turning around. He's like, someone needs to have a word with them, but it can't be me. So you could just see the hospital pass coming. It's like, well, Pete, can you have a word? So I had quite a sticky conversation with mum and dad to say, look, you were present at the meeting where we all bought into this plan. And all of a sudden, there's night after night of chauffeur-driven limousines turning up to the house. You're off to eat at the Ivy restaurant, which is all lovely, but these are the bucket 3 items you treat yourself to once in a while, not 3 or 4 times a week. And can you see that this spending is excessive and it's spoiling the plan and ultimately spoiling your son's, in this example, financial future and well-being? Oh my God, yeah, I hadn't really considered that. I thought this has been my payback time. Well, the alternative is, can we employ you in one of the vehicles that we've deployed? So for this particular player, he had an image rights company and he had a property company. Well, with the best will in the world, after training and after match stage and all the travel that professional footballers have to do, to keep on top of the administration for the companies is a step too far. So we said to mum and dad, well, why don't we employ you in the companies to run those effectively for him? He'll trust you because you're his mum and dad. You'll get some income. There'll be some corporation tax deductions going through the company vehicle to lower the corporation tax burden. Sort of everyone's now tax compliant and we've got a much more sort of efficient vehicle to use. So there are answers usually, but you've got to bring these things out. And in this case, I'm so glad that the player, he's only in his mid-20s, but earning an absolute fortune, was brave enough to come forward to say, I think something's going wrong. But sometimes you've got to uncover it. I have another situation where a player said to me one year, look, you've asked me for information for my tax return. I don't really know what you're looking for. You asked me for things like P60 and P11D. I don't know what they are. Can you come to the house? I'll have all my papers out on the table and you can just pick out what you need. And sure enough, I arrived at his house and he had piles of pay slips and bank statements and bits and pieces. So I started to go through the bank statements. And after 5 minutes, I called him back and I said, you've lost me already here. Why is that? I said, well, your last 6 months worth of bank statements, within 3 weeks of getting paid, you're overdrawn. And you're a Premier League footballer. I don't get that. What's going wrong? Which was met with a shrug of the shoulders. Don't know. I said, well, I can tell you what it is. Going back to my 3 bucket scenario, there's too many items in bucket number 3. So we need to deploy some financial management here. Long story short, fast forward 12 months when we've had a financial planner go in and sort of clean things up a bit. We've restructured things from a tax perspective. The most recent bank statement showing a healthy credit balance. Look at his mortgage statement. Now we have a reducing mortgage balance because previously he was able to afford the interest on the mortgage. But when I said to him, where's the plan to actually repay the capital of the mortgage? Again, met with a shrug of the shoulders. So in that situation, in 12 months, we completely changed this guy's financial outlay and outlook completely from being one where he was probably heading for the bankruptcy courts into one where he had a sustainable future. So it's just having that ongoing dialogue with your advisors. And I'm not blaming players or influencers for making mistakes. We're human beings. But this is our world. Use us. We've got advice to give that can help them have a better future. So don't hold back. Come and talk to us.
Absolutely. And I think a theme that kind of runs true through all of those stories that you've shared is the level of trust that your clients have with you. And I think part of that must be your kind of strong understanding of their industry, which is clearly very crucial.
Yes, I see our role as being a central trusted advisor. And the clients I'm particularly close to, if you used to ask them what it is I do, they'll probably say, he does a bit of tax, but he's actually like my big brother with his imaginary arm wrapped around my shoulder, pushing me in the right directions into where I should go. And a lot of the time, it's advice that Pete himself or Crow can't give, but he knows the right person to go to or the right firm to go to, so I'm going to be well looked after. And that's perhaps a nice thing to say, because if any well-known, high-profile person comes to any advisor, the temptation to say, fantastic, I'd love to work with you, becomes almost overwhelming. Has that advisor got the credentials? Have they got the experience to properly look after you? And I would say to influencers and sports people, just don't take people at face value. Make sure they've got those credentials and they've got the experience to properly look after you. Ask for testimonials, ask to talk to existing clients and query with them what sort of services they're getting from this advisor and why they like them. And for us, we're in this for the long term. It's not just a case of we want to act for a high profile, high earning sports person or influencer at the peak of their career. It's that longer term relationship we want to see them, perhaps more so in a sports person's case, into post career number 2 or career number 3. Or if it's an influencer, perhaps they've got more of a shelf life doing what they're doing, but we're in this for the long term. And it's something we really enjoy doing.
Just as a final note, what would you say is one piece of advice you would give to someone starting out in the industry?
If you're starting out in the industry, get the right advisors on board and get whatever structure you have right first time. Creating a new structure to replace one that's gone wrong, or putting corrections in place to right wrongs of an existing structure is time consuming. It can be expensive. So it's always the cheaper option to get things right first time of asking. And again, that's why I come back to my point about using an advisor that knows what they're talking about, has trodden the path, and can bespoke a situation to the client's needs rather than taking something off the shelf and changing the previous client's name to the new client's name and just pretending it's going to be fit for purpose. That usually doesn't work, and it's a recipe for disaster. So I think to finish off, Francesca, what I would say is, we do have that experience at this firm. I've worked with people in the sports sector and the influencer sector. I'm giving away my age now, but for more than a few years. I've got a few grey hairs to prove it. We know what we're doing. We do have that experience, and it's not just me. There is a team of people around me, not just in tax, but on the accounting side and the financial planning side. So it's a sphere in which we operate, and I think we operate quite well.
Thank you very much, Pete. That was great. If anyone would like to get in contact, what should they do?
So my details, there'll probably be links to this filming, or I'm on the website. So please contact me or any member of the Crow team, and we'd be delighted to help you and work with you for the longer term.
Yes. Thank you very much for watching this episode of Crowcast.